Yo, what's up, people? This is the Determined Trader, and I'm sure some of you have noticed I did change my name in the YouTube. Just something I've been kind of been wanting to brand myself differently, and I kind of like it better. Just because I already had pages kind of created around this kind of name, and so I just added the Trader at the end, and the Determined Trader it is. But anyways, today I just want to talk about order blocks and what ICT mentions about them. Now, obviously, you'll see that my whole screen is pink, but that's because I have a this whole pink area is a daily fair value gap, and you'll see this orange line here that runs across. That's pretty much mean threshold. And so currently, right now, what I wanted to talk about was order block. And I know there's more to the theory of order blocks, but I wanted to go over what I know, and hopefully that can help you by watching this video and have a better understanding of order block and what ICT talks about. And so, number one, let's go into, I like to look at 60-minute and 15-minute order blocks, and those are pretty much how I would be better off when I see it. I'm better off and more confident in my trades. I'm going in the direction of the market. Now, keep in mind, you still have to remember bias, right? Bias always comes first, and narrative. Okay, those are two different things you need to know. I'm not going to get into those, but I will get into the order block stuff, and I'm just letting you guys know what is required before you start implementing order blocks and being able to use them. And then also, the last thing you need is time of day, which is what session you're trading, whether it's London session or New York session. Those are, or even Asia session, just not recommended. But London and New York session are usually the best. But anyways, so number one, we have an order block. For example, we have it right here. Okay, now the market pushes down in here into that order block, and you can see that it respects it and it goes into mean threshold. And so I'm going to go ahead and add my fib. And what ICT talks about is the mean threshold is really the area you want to see that be held and respected and see the market turn around. That's how you see it here. Now I'm going to go ahead and lock this up. And whatever I add in here will add it into my other chart. And so you can see I also have that in here too. And so anyways, what you want to see is the market pushing into the order block, right? Especially because here we had already taken out what? These are all sell stops here. Okay, so we've already taken out sell stops. We climbed right back up. And so that means that we're now heading higher, according to this, right? And because of that, if that's true, then every down candle would be held as support or resistance, which is what support resistance is. It's not really support resistance, just what I can say in order for some of you to understand me. But anyways, order blocks is what the market looks at. This is pretty much where orders will be accumulated. And anyways, so the whole thing about order blocks is you want to see mean threshold be respected. You want to see the high of this order block be respected. So seeing this coming down to mean threshold, and you can see it can go down, it can go over it by just a little bit. Now you don't want to see it go all the way like this, right? Push through. Because if you see this in real time getting pushed through, what that indicates is that the market can be a bit weaker, and we may be able to see this market push further down. Now, this is when you're seeing it live. Okay. Now, once you get to this point here, you can usually go down to a lower time frame and kind of see what's going on, right? But not to lose myself, I want to continue being here in the 60-minute, and I want to keep showing this part here, because another important thing that matters too is once you see this push through, this is when you'll want to go down into a lower time frame. And for example, here's the order block that we outlined on the 60-minute. It's just this is now a 15-minute. And you can see the market push down. And this is actually another key point. So even though you see the market push through, it's not something we want to see. We want to see that mean threshold hold, right? But what's also important is how the candle closes as well. So in this case, it closed right above this fair value gap, right? And that's another thing to keep in mind. What makes an order block is because it has a fair value gap. Okay, that's what makes the order block an order block. So here for the 15-minute, you can see it used the top of the order block here because it did get pushed. It did push through by a little bit. Let me grab my line tool here. You can see this is the actual 15-minute block right here. And you can see this block and this block here are both an order block, right? And so you can see that it used this one right here to get down into it, pushed up, and then it actually closed just a bit shy below of this one right there, right? Of this order block here on the 15-minute. But you can see it definitely closed very close. This candle here closed right, almost just right on the 60-minute. And so that's exactly what we want to see. And this is why we have to wait. It's important to wait. Even though we see the market push through in the 60-minute order block here, it's important that we need to wait. And to see, right, and to see in the 15-minute, we can, once we see this coming down the 60-minute, we can jump down to the 15-minute and be able to see and wait what happens here after. Okay, and then you can see the market pushes down again, and right here and here at this point, you can actually start going down into a lower time frame. And for example, here's the 1 minute, and you can see here actually what I like about this is the market eventually then uses this right here. This would identify as a breaker block. No, actually I like to color my breaker blocks differently. You can see here it finally, this was where it was pushing down to. This was mean threshold. You can see the market just be choppy around here, and this is where we have to wait, right? And give me one moment. Okay, and this is where the market starts getting choppy, and this is where we have to wait. And so this is why it's important. Right after this candle closes, and then let's say this next one closes too, we have to see this. We would like to see this candle and see how it closes as well. So you'll want to have this one open, the 15-minute, right? Because we already know, how this 15-minute closed. This was a very good close. And then here's the other candle that opened after at 6, or actually 9 a.m. Eastern. And then you can start going down into time frames, either 5-minute, 2-minute, or 1 minute, to be able to see the market and see what it's doing. And during that time, you can see it was choppy. It finally broke through, and what that means is we had a low here, lower low, and then market broke through. It broke structure, so that's a market structure shift. And then finally, it used this breaker area here to gain momentum and go higher. So this would have been a valid trade. Now, it all depends on your pretty much risk tolerance if you wanted to. Right, if you were to get in at the top of this, you'd have to have your stop. So we have this here, and then we have this order block here. To be honest, the stop would have to be at least below here. So, at least, and then given the spread amount as well, so probably about 5-point spread, 5-point move here, or 5 pips, right, of stop loss, and you can easily target the tops up here. Now, I'm obviously already getting way ahead of myself and talking about targets and entries and whatever, but I'm kind of just continuing on with my thought process of what's next, right? How do you get in here? How does this help me to identify a trade, etc., etc. But anyways, continue on with the order block. So, once that happens, let's look at the 60-minute. Let's go back to the 60-minute. You can see that at the 9 a.m. Eastern, this is exactly how the 60-minute closed, and that looks amazing, right? Now, you don't always have to look back to it. Once you see the order block push down in here, and you go straight down to the 15-minute, you can stay in the 15-minute and see how this happens, right? And you can take a look at least 1 candle, 2 candles. And if you're asking, so then how do I know when this is going to start going back that way? And so the way you know is you'd have to start looking at your lower time frames, right? Because once you see this one candle be respected, if not, if anything, this candle could have easily just gone straight down and then used this as support area and continued going lower, but it didn't. It closed above the fair value gap. It closed almost just about or exactly at this order block open, right? And that's why it's important to then, once you see that, you can go back down into the lower time frame and start hunting for an entry. And so here you can see now the market's starting to push higher, and it's gearing towards to take out these relative equal highs. And you know, this one here, if you would have want to have gone in here as well, it's at this point it's kind of hard because you have to have your stop below, because here's an area that's open. And then you have to account for that, and that looks like another 5 points of risk. But this could easily head lower around this area, and then it'll start going higher. But anyways, hopefully what I spoke about here in the order block and how it can be used, you know, hopefully that helped your understanding of the order block. And once again, like I mentioned, you don't want to see this. You know, I know it pushed through in here, but at the end of the day, when you see this push through in here live while it's happening in the market, this candle still hasn't closed. You want to pay attention on how it closes afterwards, right? Now, for this to push through all the way down in here, like I said, this would indicate that it's getting weaker. And now, because it's coming into a for example here, this is a green candle, you want to see that get pushed through as well, right? You want to see that pretty much not be respected, and you want to see this market push higher. And now this candle here, it closed really strong, so that's also a good indication. Now all this comes with experience. Don't think that just because I'm showing you this you're going to be able to get it right away, but I hope it's able to help you understand a little bit more about the order blocks. Now the alternative would be if this candle here would have closed all the way down here and, you know, pretty much fills in this whole thing. That's a really good indication that we're going to start heading lower. Okay, so hope that helps, and hope this video helps. Hope I didn't ramble too much. I mean, it's a whole 12-minute video about it, and I hope I got a little bit more specific on the order block and showing you the higher time frames and going down to the lower time frames and how you can look at different entry signals. And I'll actually include the link to the video where I found it very helpful from Inner Circle Trader on kind of what helped me to be able to look at this market like this and be able to go from the higher time frames to the lower time frames, etc., etc. Okay, so anyways, hope this helps and have a good one.